Guys, let me know what you want me to go through, and I'll start off with um, letting you know that I also got stuck. I got caught out on this data. Now, look, this just reinforces um, the thesis that look, while fundamentals are key, they're obviously the main. They are the underbelly of markets, right? But from a trading standpoint, if you're trying to day trade, then I advocate that technical analysis overrides fundamental analysis. You're hearing just music. I cannot hear you. I can hear you. I cannot. I can. Okay. So let me know. Let me know if you cannot hear me, please. Let me know. Let me know. I can't spell. Cannot hear me. It's okay now. US 21 is hearing just music. I hope it's good music. 1230 can't hear me. Malik, perfect listening. So we got a mixed outcome here. Your screen is good too. Okay. So 1230, can you hear me? Because you said you can't hear me. Is that a typo or you can hear me? Your screen is good too. So I'm getting mixed messages from 1230. US 21, all that person can hear is music. Hara, you said you can't hear me. Then you say you can hear me. I can hear you. The screen is good too. Right, so 1230 hears me. Hara can hear me. Just US 21 perhaps can't hear me. Right, well, for the benefit of those that can't, you're going to have the recording posted shortly after. So, talking about fundamental versus technical or a mixture of the both, what is best? Whatever works for you. But I'm telling you now, after many years of this, for me, technical analysis is going to get you further in day trading, right? So when we're trying to pick off trade setups on the day, open and closed on the same day, technical analysis is going to get you a lot further than fundamental analysis. Fundamental analysis is where you're going to get whipsawed. All right. So um, on that note, let's talk about what happened today. So we got the non-farm payrolls that came out. Now, to my mind, that should have been bearish dollar, and it should have been a sustained downside movement in the dollar and yields. No question about it. We had the unemployment rate, right, come in worse than expected. We had a higher participation rate, yet a higher unemployment rate. So that isn't good. And what was the numbers actually? I can't remember off the top of my head, but I just know it was. I just glanced at it and thought, well, that's dollar bearish. Um, Hourly earnings lower, average hourly earnings lower, month on month and year on year. I don't know if you can see that on the screen. Um, Labour force participation rates higher, but you've got this unemployment rate at 3.8 as well. So you've got more people um, participating in the market, but you've got an unemployment rate which is higher. So it's not particularly good, is it? But nonetheless, the dollar ripped. Now, and markets that should have rallied, such as the US 30. So let me give you an insight into my start of the day then. So someone asked in the group, how do you go about choosing the best pair to trade? Well, it's relative, okay? So for instance, on such an outcome, I would have expected the US stock market to rally. Now, having said that, in hindsight, when you look at the stock market, it's already up. It's already pretty high up. I mean, if you look at the daily chart, I mean, how much further should it have rallied? Um, So let me go to a different chart where it's cleaner. So this is the day here, yeah. So we've got resistance. Excuse me. We've got resistance up in here. All right. So including the wick, and we're already 1, 2, 3, 4, 5th day, sixth day. So sorry, 1, 2, 3, 4, 5. I can't count. 1, 2, 3, 4, 5. So 5 up days, including today. Sixth day, right, of higher highs. So one might argue, well, maybe it was already priced in, right? The market is already in anticipation that, well, the Fed isn't going to hike rates next month, but it's not just about next month. It's actually, in fact, it's much more about next year. So with data like today coming out, so you've got the ADP report, and I can't remember the backlog of data that we've had that just hasn't been favorable to the hawkish outlook, right? So perhaps that's why we're already up high. But you would have thought on a market, on a data as powerful as non-farm payrolls, at the start of the month, you would have anticipated a move up in stocks. So that's what I was looking for. Someone asked, well, how would you go about during the time that the market was actually looking as though it wanted to go higher. So if we look at I was trying to trade the US 30. Um, the US 30 to my mind, and if we compare it to the S&P, US 500, for instance, and it goes to the same time frame, 15 minutes, that's 1 hour. Let's take it to the 15-minute over here, and we'll clean up this chart. Bear with me, sorry, not prepared enough. There we go, and we'll put that to a blank chart. So if you look at these before, well, let me get them to look similar. Bear with me. What is that? Is this the US 500? Right, great. So in comparison, we've got Monday, Tuesday, Wednesday, Thursday, Friday. Okay. In fact, what we'll do is all right, I'll get there in the end, guys. We'll go to the 15-minute chart. That's the 15-minute chart, good. And we're going to get rid of all this. And right, still not doing what I wanted to do. Right, it'll be worth it when I get there eventually. But I don't know why it's not doing what I want it to do. US 30. Why isn't it? Right, well, it's not giving me what I wanted to give me, so we'll just have to press on. Ah, okay, so day, that's why. That's why. Right. That's why. There we go. That's better. Right. So, taking the week, comparing the US 30 to the S&P. Okay. On the day, we had a market that looks similar. So I'm just going to zoom in to Wednesday so you can see this better. I'm going to go to a 1 hour chart. So at the time of the data, um, I swear this is really annoying. Right, back again. Okay, right. At the time of the data, essentially what we had here was the US 30 was lower down. So if the data came out, that should have been bullish for risk on for stock markets, for the Australian dollar, for the euro, and so forth, and even gold to that extent. Um, Someone asked how to choose the best pair. Well, for me, I was concentrating on the stocks. There's only so many things that you can look at any one go. So you can't see the chart. Please don't forget. Yeah. Okay, I'm just going to have to press on, guys. If you can't see the chart, what I suggest coming out and then coming back in. There will be a video recording of this afterwards. Um, but for time's sake, let me give you a screenshot. Um, so the market, so the US 30 was lower down, it sunk, right? And therefore, to me, that would have been a better candidate for longing because you've got these shorts, you've got low hanging fruit to move into. So that was the thesis. When that data came out, and it was indeed showing signs um, that nothing's working for me at the moment. Here we go. So you've got all of that to move into, and it was showing signs that it was going to go bit, right? So rather than the S&P, because it's already rallied up into the shorts, right? It's already put on the squeeze. That's not to say it can't move higher, but this would have given you a better risk to reward, and you could have taken this on even further up into daily um, targets looking left. So, and to my mind, given that we'd already come up, there was plenty of room to come up and target those highs, if not just into here, right, for a nice 7 hour risk to reward. But anyway, it wasn't to be. Now, the approach to that was, as I said, not trading when the number comes out, let the dust settle, and and let the market set up for you. So this essentially was a long squeeze opportunity, and we got the data, and we got some of the short squeeze on. Did I say long squeeze? I meant short squeeze, but it wasn't to be, right? So I did get caught up in this, although I did everything right. And on a normal non-farm payrolls day, I'm quite convinced that would have taken off to the upside. And I can't explain why there was so much resistance. Um, the only explanation I have is that we're start of a new month, bank holiday weekend coming up. Um, Perhaps the fact was already priced into the market, given that we're up so high anyway. And that brings me to the point that you've got to be flexible and willing to tell the market you're wrong. And I took a couple of losses. I didn't let it run to my full risk. If it's not taking off as it should, you've got to start thinking, well, hold on a minute, there's something not right here. I'm not prepared to take on that risk. These types of trades should fly, right? So I was able to get out before my full risk, and that's fine. And I managed to turn it around with the S&P. I put plenty of information in the group on that. I don't know if any of you followed me on that. Let me know if you did. That'd be great. Be good to get some feedback if that's the sort of thing that you want more of. But so the point I'm trying to make here is, fundamentals versus technical analysis. I'm going to go technical analysis every time. We talked about how long this market was. It was a beautiful setup to short. It just so happened that the data at the time didn't give us the confluence. The data was going against the technical setup. But then, lo and behold, what did we get? We got the move to the downside. Now it didn't extend as we'd like to have done. Why? Because the data was actually bullish. Um, it was actually what? Sorry, it was actually bearish for the dollar and bullish for risk. So that's why we probably didn't get the follow through. Now, if we look at the S&P, um, this is the one where I made my money back and some. So there's plenty. I'm not going to go through this trade now, but there's plenty of information in the group. I put out several videos on this, on how I went about it. But it was a beautiful 5R trade, and I was scaling um, in and out. So at key levels and so forth, and managed to catch the bottom as well, right on that candle, and came out of the trade. So, um, point being is, that was a beautiful technical setup. We talked about it in the meeting. It was what we wanted to trade. We didn't get the upside. I was trying to trade the US 30 on the upside. Fine. So I just maneuvered. I went back. Right, fine. I'm going back to my original thesis. This market is broken down. It's set up for a beautiful short. Shame it didn't follow through. I mean, this took all bloody day pretty much. So to me, it was inevitable that I wasn't going to get the follow through, and it was best just to pack up and go home. So that was my day. How about yours? Can anyone give me some stories from your day? Um, Now, looking ahead, what does this mean? Well, I was thinking about this, and I was thinking, well, that should have taken off to the upside. So, um, looking forward to next week, what's this going to be looking like? Where do we stand at this point? We've got a market that's very long, and we only had a very short squeeze. Perhaps we're going to continue on up, is my point. Um, and in that, I mean, we haven't had much of a correction, have we? So it's a tricky one to call. It is a tricky one to call now. I don't really understand it. The data that came out afterwards was bullish for the US dollar and weighing on risk sentiment, and that's why we got the sell-off. So it's very mixed day, very hard to navigate. Um, Probably not a beginner's market to be trading. Not an easy one. Where do we go from here? Well, I'll tell you what. I'll do a summary over the weekend. I'm still scratching my head, to be honest, and I want to look into it and have a bit of a deeper dive. But um, on the dollar itself, I mean, it's taken off. It came into. If you recall, we also talked about the euro. It's essentially the inverse of the DXY, and we talked about how this has the potential of being crippled all the way into these lows, which is essentially what we got, right? So that was another beautiful setup. If you were able to be flexible enough to accept that the market just wasn't having it today, it didn't want to ride the risk on news out of non-farm payrolls and the rest of the data that's been coming out. Quite bizarre, really. But there we are. So the dollar strengthened up. But again, if you look at this and break it down, I'm going to get rid of all this junk. Just look at the technicals. Just pause that and look at it. Look, so Asia. Let me put the. So these are the sessions. This is Asia. This is London, the US. Now, if you forgetting about the data, what did you expect at this point? So the market shot up, right? So remember, When we get a pump, you're in anticipation of the dump, especially if the market is broken down. So if you see this drop here, break of structure, it broke the Asian lows. It broke yesterday's high. This is a market telling you, hey, we're coming lower. We're going lower. We're continuing the trade. Others would argue, no, it's just a stock pump. We're going to go up. Well, you got that too. But when the market fails to break out to the upside, so we've broken up, fails, 9:30 New York, who's in the money? It's going for the money. And that's what we got. And some. Right? So that was a broken down market. It's something we did semi touch on in the morning meeting. But admittedly, I think I was biased the other way, was I not? I can't remember. But no, I was both ways on this. I was in two minds about it. I didn't know whether we were going to get a pullback and a continuation, or if this was the weekly continuation to the downside. So a weekly continuation, which is essentially what it looks like. Okay, so you're all very quiet. I don't know if you're all still there. We've got 8 in the audience. Just looking if there's anything you want me to look at. Gold. What chart this one is? What's going on here? Okay. Right. So gold, impulse, correction, continuation, peak formation. So we've come up, very similar to the euro. This up, down, looking for a continuation to the downside. We've broken down this bullish market. Yeah, so this was another bearish setup. But I think I was concentrated, I was too focused elsewhere. So we talked about this at the beginning of the day, didn't we? So this is my work until the beginning of the day. Right. 3 levels of rise out of Monday's opening range. So 1, 2, 3. 3 pushes out of the opening range. Does everyone get that? So I'll just go over it again. Opening range, Monday. Remember, I work with weekly templates. So starting on Monday, not usually much to do on a Monday. I'm not really too excited to come into work on a Monday. Tend to be, um, bounded by tight ranges. Tuesday, not so bad. You tend to get breakouts. So that's what we got. All right, we got a first push out of the opening balance. So opening balance, or initial balance, whatever you call it, initial balance we call it. And then we got first push out, right? So longs are in the market. A second push out of the opening range, initial balance. Longs are in the market. Oh, this thing is going wild. And then a third push out. All right. So 3 pushes out of the opening balance on a Friday. We're looking for shorts. All right. So people are getting trapped. People like me who are trying to trade the upside, thinking, well, trying to trade the data, trying to be clever and thinking, well, that's got to be dollar bearish, that's got to be gold bullish, it's got to be good for risk sentiment, better buy stocks, even though we're up high, totally going against my methodology in doing that. So rather than do that, stick to your thesis. So the thesis was We're up high. Technically, this is easy money. I mean, it just looks easy, doesn't it? 1, 2, 3, sell. And that's exactly what happened. So that's gold. Now we've got the correction. So there's the Fibonacci. Put on that impulse to the downside. Fibonacci. Lo and behold, we're coming up to the 38.2. Right. So I hope you guys now are starting to see this it repeats itself, right? These themes are constant in the market. Okay, 38.2, looking for the correction, looking for the continuation to the downside. It's not to say that this can't keep coming up. I mean, why not? But the further it comes up, the more likely it's going to decelerate, and that's even better. We'll get a higher entry, a more premium price to sell, right? If that indeed is going to play out. But if it does, I mean, a break of 1934, that low, opens all of this space for a beautiful low-hanging fruit continuation trade to the downside. So keep an eye on that. And I was also asked for CAD yen. CAD yen, come again. Right, go to the daily chart and why pick such a messy market? Look at these wicks. There's nothing in here that I want to be involved with. 4-hour chart, it's a bit better. Okay. Right, so we've had a break of structure. So to me, this is a bearish scenario. The break of structure I'm referring to is here. So this was the higher low for the higher high up there, yeah? Or even right there. Perhaps it's the highest high, is it? I prefer to name that one over there. This makes more sense. High, lower lows. Yeah, I mean, this is a liquidity hunt. I'm ignoring that wick. Right, so we've got a breakdown of market structure. This can be regarded as support. Again, we're back above it, but it is broken support, so it's a weak support line. We're on the front side of that bearish trend to the downside. Perhaps we're going to roll over it and extend to the downside. Coming into over here again. So we've tested it once. And a break of there opens up the floodgates. Meanwhile, a break above there, onwards and upwards, and we're up into this area over here on the chart looking left. Possible resistance area if we break above 108.10. Right, I'm being asked about silver, XAG. So we spoke about this earlier. I marked this as the X on the map for where this could go to. And 2478 we're talking about way up here. So if you entered in silver at 2478, right up there somewhere, do you see that trade? Yes, absolutely. That was the trade, same as gold. It was a breakdown. It was a break of the support, the structure, I mean, if you got it at 78, you were pretty good. Look at this thing here, 78 on the nose. Might be able to pinpoint it on the side. So there's 78. So selling at 78, well, fantastic. Well done, whoever did that. But I would have preferred to have seen a break on the 5 minute chart, break of structure, which is actually here. Break of structure, sell. I would have been selling there. Stop above here, targeting asymmetrical risk to reward to the downside. All right. Does that answer your question? I hope. Can't hear again. Dollar CAD. I bought at 74, 78, not sell. No, that was okay. Should have sold. Okay, we're in a market that's up high. So do you follow me on the weekly template methodology? We're up high. Um, you might find interesting some of the videos I've done in the education section. I'm pretty sure we talk about buying at a discount, selling at a premium. So I'm always looking to sell. I like to split the market up into 3 levels: level 1, 2, and 3, and I'm looking to sell at level 3 or buy at level 1 and doing nothing in between. Because then you're caught on the inside of the range, go either way. But once you're up high, then the path of least resistance is probably to the downside, and vice versa. Any further questions, guys, or we'll wrap this up and call it a week? And wish you all a very, very good long weekend. We'll be here. I'll be here on Monday, and who knows? I mean, the markets should be quiet on Monday, but Forex is 24 hour, and it's not to say you can't get any moves. The rest of the world is trading. Dollar CAD. Did I miss that? Sorry, let's look at that. Dollar CAD came up into resistance. Nice strong move due to the US dollar. US oil was on the back foot as risk appetite had its rug pulled from under its feet, so that allowed dollar CAD to fly high, and it is now in resistance. A pullback is probably, well, it's a strong possibility, yeah. So no guarantees, but a pullback, and I'd look for the confluence between old highs over here, aka structure, old resistance, regarded as support on the way down. And if you've got a confluence with the Fibonacci's, even better. In this case, it's the 50% mean reversion mark, just below the 38.2 Fibonacci, which has a sort of no, not really. I was going to say it has a confluence, a semi-confluence over here. It sort of does, I guess. But I don't know, it's that reliable. So I prefer to target the 50% that has a direct correlation with these highs from yesterday's highs. So perhaps we're going to roll over into there, and the market will have a think. So Monday and Tuesday are going to be interesting because there's quite a lot to digest, really, from today's data, well, from all of this week, as the countdown to the Fed ticks down nearer and nearer. So there we are. So any questions, guys? Oh, and of course the GDP came in below par, didn't it, for the Canadian economy today as well. So That probably didn't do the CAD any favors either. And yeah, just bearing it again, I just want to throw this out there. I am thrown by this data today because we also had the headline PCE deflator come out earlier this week, and that too was up 3.3 versus 3, and it edged up as well for the core, edged up from 4.1 to 4.2. I mean, not a massive increase, but nevertheless, it's uh, it's something to take note of. I mean, perhaps that's why we got such a mixed outcome, because we've got something here that's deflationary, then we've got other data that's reflationary. So anyway, we don't know. So again, fundamentals, bar humbug. I much prefer looking for the setups. Is the market high? Is the market low? Where's the high of yesterday? Where's the low of yesterday? Are we in between? Are we breaking through it? Are we breaking through it to pull back? I mean, that's essentially what we got today, right? So, and hence how we ended up coming out on top and strong into the weekend. All right, guys. So, on that note, have a great weekend, and we shall see you on Monday.